Once again, as we work our way through this beautiful crypto correction, which is giving absolutely amazing entries into some of the more strong assets in this market, today we will be focusing on a long-term analysis of Harmony symbol 1. With that said, welcome back to EllioTrades channel. I'm your host, Krown, again today, and I want to follow up on these FOAN tokens, the FOAN tokens, or assets, or whatever the hell you call them. Doesn't matter. What matters is the analysis on them and what this sort of crypto correction is presenting as an opportunity for more long-term plays, of which the last few ones for both Atom and I believe Fantom, yeah, that's it, doing pretty damn well. Anyways, if you are interested in a more in-depth and long-term Bitcoin analysis, I do that exactly on my own channel. There is a link in the description below if you are so interested and think that that may be valuable to your own life. All right, so first and foremost, I always want to start it off with a quick preliminary rundown of Bitcoin, not any super in-depth stuff, but just to get a bird's eye view of what to expect and how that kind of correlates into the asset of the topic of the day. So we've been following this global open interest chart right here. Again, you can find this data for free on my own app. It's you just need to type in on your browser app.crowntrading, Krown with a K, .net, and it'll bring you to this page right here. All of this is free, and this has been incredibly powerful in judging all of the past major corrections. And when I say major corrections, I'm talking about 20 to 30% moves or more, actually. So anytime that we've seen the open interest get above 13 billion for the last year, it has been met with some pretty hefty downside price action. I want to pull your attention back to almost a year ago in March, where we saw it get all the way up to about 13.5 billion before going from $60,000 price per Bitcoin to $50,000 price per Bitcoin. Then it recovered. We see another new all-time high right here on the open interest, and that precipitated the whole meltdown from $60,000 or $65,000 to be exact, all the way down to our summer lows at $30,000. Then more recently in September, same interpretation over here as Bitcoin washes out these over-leveraged positions from 53,000 down to $40,000 in just one fell swoop. And then again, more recently at the $69,000 all-time high before getting ready for that move down to where we're currently at in the low $40,000 territory. The reason why this is relevant and the reason why I continue to bring this up is because we are once again coming off of extreme reads right here in the $13.5 billion marker, which Bitcoin met on the test of the last range highs at $52,000, which has been giving us a bias to be generally cautious and looking for downside amongst most crypto assets, except for a few, one of them again being the topic of today. And you'll notice right here on this data that we're actually still relatively high on the open interest, representing those leveraged positions. And it's not until we really come down realistically to about 10 billion or so where we consider this a bit of a reset, similar to what we saw over here. You can barely see this iteration over here, but this was just 1 year ago, actually, coming after a 30% correction, just by the way. And then, of course, more recently in September, and of course, over here on the last big bounce. So I would not feel willing to call this correction over until we do see open interest come somewhere down around there. If we go into an hourly data feed, you can see that things have come down significantly, absolutely. More than a billion taken off the books, but still very likely to have more unravel here. And if we see this unraveling happen over the next, let's say, week or so, from today, the 7th, at which time this is being recorded, to maybe next week on the 14th, that's where I start to really get interested in, well, just the general market again, except for these very strong coins that we're looking at recently, which are likely to be the biggest beneficiaries of this. So going to the price action chart right here, again, I'll just bring you to this very simplistic chart. And you can see how range plays work. So obviously where we're operating in between these two ranges before, basically selling 52, buying 46 was the play for about a month fully. And then this week we did see a break of the quote unquote bad range at 46,000 and change. And that did initiate our targets down to the $41,000 region right here, of which have been successfully tested today and thus getting our first bounce. Do I think that there could be another washout? Of course, yes. According to the open interest, we either get a washout with more leveraged longs being taken off the books, or we see shorts start to close. Either which one of those situations will bring down the open interest and start to reset things in a more healthy manner, let's say. Until then, yes, still very much cautious, and we can apply the same logic over here. While I would be looking for bounces off this $41,000 level first, very similar to what we saw back on over at $46,000, If Bitcoin were to break the lower end of this, yes, I would be looking for the next big move to the downside. In this case, I'd put in a preliminary blue box, basically encompassing about 38,000 to 38,500, just as an aside. In case if this happens, on a day that we're not recording one of these videos, just want that to be there so that, well, hopefully you can stay safe. Okay, beautiful. So let's get into the topic of today. It is Harmony, of course, symbol 1 over here. And this chart is just absolutely beautiful and showing relative strength for, a while now. Whilst most things in this market are correcting, of course, we see this one not just putting in rallies, it's quite literally testing around all-time highs. It's really, really good right here. So I wanted to mark off a few things that I think are of interest. We're going to first go in and mark off, the current ranges going on. And it would have been better if we actually recorded this video yesterday, similar to the way that we did Atom and Fantom, looking for those pullback targets, of which those have been met, and so far so good. Same thing for Harmony, taking the upper end of the more aggressive pullback target right here at 26.5 cents, even wicks down to my 25 cent region from a stream earlier. But more importantly, on a closing basis, which is what we do judge these things on, 27 cents was the call, and there you go. Beautiful, alongside the 382 Fibonacci retracement, which is getting actually those wick lows right there. If things do fall further south, meaning that this area does fail, which I'm actually not looking for it to do, to be quite honest with you, this looks to me like the next higher low, if anything. But if it were to, initiated and validated by a daily closure below 26.5 cents, I would be looking for the next level at about 23 cents to be hit, and then we'll come back to it after that and judge. Until then, 27 cents, very clear and obvious in validation. You have seen the pullback for right now. On top of that, you can see the top end of this structure is right around 33 and let's say 75 cents. So a validation of long-term upside continuation, which we'll talk about targets at the end of this video, would be had with a daily closure no less than above 33.75. That's 33.75 cents. Okay, beautiful. So let's bring up our indicators over here. I want to be going to a higher term time frame in this particular instance because this is a macro asset, and call it a few things of interest. So we do notice that on this current higher low for a 5-day time frame, which represents, a good chunk of change for an asset that like this that hasn't been around for, more than a few years realistically, we see a drive of hidden bullish divergence. How do you judge that? Well, we are getting higher lows on price action right here alongside lower lows on your RSI momentum oscillator. What does that tell you? Bears are using more force to push price action down. However, they're getting further along the way, and Harmony puts in higher lows, which is, well, quite bullish. On top of that, we see one of my favorite momentum oscillators, that being the Jewel Light actually, which you can actually grab for yourself for free as well. It's just a new indicator that we came out with on the TradingView library. Just type in Jewel Light in exactly the way you see right here. And that is giving another upside signature. So we have both momentum oscillators, both very powerful ones, giving some nice powerful signals at the top side of the range. On top of that, I want to put the focus now on to kind of judge the severity of a potential move here on the BBWP indicator right here, representing volatility. So when volatility contracts, as you have seen, to essentially like 1-year lows, about 1-year lows here, we expect, based off the nature of volatility indicators like this that are represented in a percentile format, that expansion will inevitably happen. An expansion for volatility does imply that, in this case, within the constant uptrend, we have momentum continuing with volatility. We can start to judge and get an idea of the severity of a move. And then we'll talk about targets in a second here. So let me just get rid of this for now. But I want to go back in time and mark off a few of these major reversals. So the last time that we saw volatility this low on a 5-day time frame was coming out of the summer base here in the August bear trap, before going up over the next 40 days, 200%, and ultimately over the next 85 days, 450%. Rather large number actually. Now volatility is direction neutral. You can see that on this expansion phase over here comes with some downside price action. So it does work both ways, obviously. But the time before that, where we saw an even lower volatility read, to be fair, we did see a humongous move from basically the start of last year over the next 45 days, 900%. I mean, that's, I'm in no way, shape, or form saying that we're going to get a 900% move in 45 days. Probably unlikely. In fact, very unlikely. And over the next 90 days, 4,600%. Pretty damn good. And then of course the other iteration that we can come up with right here, as I turn down the volume on my phone, apologies about that, is right here coming out of this base very early on in this asset's life, but did precipitate the next 500% move to the upside over 100 days. So that is very much relevant. And for our current iteration right here, we are coming off of yearly lows for volatility. And that does imply that this move in the making here, upon validation, so we do need validation above the topside boundary here, is likely to be rather important. So let's play around with numbers here, or actually before we play around with numbers, let's first plot some Fibonacci extension targets, which we can do very easily. So let's take the base of this formation, and we'll do something like this. And upon validation above your, again, what was it, 3375 region, we would be looking at the next following weeks, let's say, 10 to 20 days or so, with targets up somewhere around about between about 45 cents and $0.50 right there. Do I think that things would stop there? Probably unlikely. We very likely see macro highs at the 1.618 extension. And if we were to take a measurement from our current base to that high, that would be a 200% move, which is relevant and is, I suppose on the lower end of the context of some of the moves that we expect to see from those low volatility reads on the 5-day. But over time, wow, it's actually getting quite high there. Over time, it actually would be suggestive on any sort of a higher term time frame closure, specifically above that $0.50 target. We would very likely be looking at, I suspect, although this sounds a little bit crazy right here, a move towards somewhere between about 90, let's call it 90 cents, give or take 10 cents. Technically speaking, $1 in a more aggressive situation. And from our current low, that would be a 450% move, which we have seen based off of those signals in the past, which is rather important. Of course, that would be much further down the road upon validation, and understand that, a lot of things can happen between then, but we'll come back to this one over time as we have with the prior ones. And, we'd probably be looking like months down the road, to be fair. So with all of that in mind, I want to now bring you over here. Let me just double check. Yep, here we go. And I forgot to mention that also weekly and 5-day momentum is also freshly turning up here. This is a really strong move, as we do see weekly stochastic momentum with upside posturing as long as this asset is closing above, by end of this week, 23 cents. Beautiful. The 5-day, same thing as well, 17 cents. So I've been even building upon that. And even the daily has upside momentum here as long as it is closing above 31 cents. So again, please understand that in the shorter term timeframes, there's going to be some ebbs and flows, but there is no invalidation for the current daily setup as long as you are closing above, let's call it 27 or 27.5 cents. Below there, I look for corrections down to 23 cents. Then we come back to it and judge it yet again. But until then, let the trend be your friend. Validation above 33.75 very likely initiates a more short-term move over the next few days, maybe a week, up to your 1.272 extension, which is your 40-cent highs right here. And then after a bit of a short-term pullback, perhaps something like this, let's say, boom, and then sets in maybe another higher low here. If things get really crazy, maybe it comes over here, whatever it is, fine, as long as you're not below about a quarter, let's say. And then I would be looking for that next move up somewhere around your $0.50 targets. That's the big area that I'd be expecting a more prolonged consolidation before the long-term macro continuation to those more impressive targets. So I think that's a good place to leave off on this video. I hope that this one was clear. Again, understand the timeframes of this, understand the conditions for validation and invalidation. We're talking very far down the road here, of course, as well, but definitely one to be watching if and when Bitcoin does turn around, which we'll be, of course, covering, what if and when it happens as well. Okay, beautiful. So with that said, I'm going to be signing off now. Take care, and I'll see you in the next one.